In the previous video, we learned what intraday trading is and determined that it is suitable for you. Now it's time to hunt for the best intraday trading strategies and start making money. So let's get started. Hello everybody, I'm Vaishnavi and welcome to Allies Blue Online. In today's video, we are going to find out the best intraday strategy for you. First, let's start by understanding what is a trading strategy. Intraday trading strategy is a set of predefined rules used by traders to buy and sell stocks. These rules define the entry, target, stop loss, risk to reward ratio and position sizing of every single trade. Before we get into the crux of the topic, you need to know some basic charting techniques. Here are a few basic charting techniques. The first one is pivot points. When the stock changes its direction, it forms a pivot point. The highest point of the candle is called pivot high and the lowest point of the candle is called the pivot low as indicated in the image. A pivot high is formed when the stock peaks while moving upwards. Three candles create a pivot high, that is, there must be a candle to the lower left and lower right of the pivot high candle. Similarly, pivot low is formed when the stock tanks while moving downwards. Again, three candles create a pivot low, but in this case, there must be a candle to the upper left and upper right of the pivot low candle. The second one is support and resistance. Support and resistance are the most important and most used concepts of technical analysis all over the world. Pivot creates support and resistance levels. Check out these images. First, let's talk about support. It is the price level at which the stock will have difficulty falling below. As you can see in this image, the stock has been coming down to a certain level, forming a pivot low and bouncing back as it is touching that level. Now, how to find support levels in the chart? It's simple. Open up a chart of any stock, select day chart from the time frame, look for the price level where the stock is marking pivot lows multiple times, at least 2 or 3 times, and draw a trend line. Here's an image for your reference. Now let's understand what is resistance. Resistance is the opposite of support. It is a price level where the stock will have difficulty breaking above. As you can see in this image, the stock has been climbing up to a particular price level, forming a pivot high and falling down as it touches that level. Now, how do you find resistance levels in the chart? It's simple. Open up a daily chart of any stock, look for the price level where the stock is marking pivot highs multiple times, that is at least 2 or 3 times, and draw a trend line. Refer to this image. Now that you have learned the basics of charting, let's learn some top intraday trading strategies. What is a successful intraday trading strategy? There are hundreds of trading strategies out there, but today we will learn some easy to use day trading strategies. The first one is momentum trading strategy. It is a simple intraday trading strategy where traders identify stocks that are supposed to make a short-term upward or downward movement. The traders invest in these stocks right before they make a move and hold the positions until the stock stops moving in the desired direction. The movement of stocks can be due to one of any reasons like strong news about the stocks, earning announcements, long-term trend breakouts, key support or resistance level breakout, etc. Remember, to use this strategy, you need to constantly monitor and have a thorough understanding of the stock you are trading. Now let's take a look at the example. On August 3rd, 2020, after the markets closed, there was a news that Reliance would acquire NetMeds, that is an online pharma e-commerce company. As the news is positive, the very next day, Reliance shares rose more than 7%, which is a huge move. The second strategy is gap up and gap down strategy. When a company comes in the news or announces its earnings during the night or after the market closes, the stock prices will react to such announcements or news on the next day. In case of positive news, the stocks open much higher than the previous day's close, which is known as gap up, and in case of negative news, the stocks open much lower, which is known as gap down. There are different types of gaps. The first one is common gap up or gap down. The price gap here is very small when compared to the previous day's close, and the gap usually fills up in a couple of hours or by the end of the day. As you can see in the image, the stock made a gap up and eventually during the day, the prices came back to the previous day's close, filling the gap. The second one is running gap. If a gap occurs in an already trending stock, it is known as a running gap. As you can see in the image, the stock is in an uptrend and a gap occurs indicating that the uptrend will eventually continue. The third type of gap is a catastrophic gap. A catastrophic gap occurs when there is extremely bad news. Such gaps will have a huge percentage drop in the stock prices. When such occur, the stock is very unlikely to go back to the previous prices. Now, let us find the best reversal trading strategy. In this strategy, a trader will track trending stocks and wait for them to reverse their direction. Refer to this image. The stock is in an uptrend, and due to some reason, the stock prices fall severely. This severe fall indicates the reversal of the uptrend and the beginning of the downward trend. Support and resistance breakout strategy. In this strategy, traders look for stocks that are trading in the support and resistance zone. Whenever the stock breaks key support and resistance zones, it is likely to move in the same direction. As you can see in the image, the stock has been hovering in the zone for a while, and as it breaks that zone, it starts moving on the upside. Well, these were some of the trading strategies that can be used by beginners easily and also are the most commonly used intraday trading strategies in India. Although these strategies help you find the entry and exit points in a trade, it's always great to be extra cautious. To be double sure, you can use technical indicators. We will have a thorough discussion of how to use the technical indicators to find the right entry and exit points in the next video. Today, we discussed about a few intraday strategies. I hope that this video has given you a brief idea about the strategies used in intraday trading. Thank you for watching. For more such informative videos, make sure that you subscribe to Allies Blue Online. This is Vaishnavi signing off. I will see you in the next video.
Investment in securities markets are subject to market risks. Read all the related documents carefully before investing.